Good morning, everybody. Thank you for joining us. We hope you've had a great week so far. This morning, we are talking about the upcoming changes to IR35. Bit of housekeeping before we kick things off. This webinar is being recorded, so we'll be sending out a copy later on today. We hope we'll have time at the end for some questions. Some of you have already sent questions in, but if you do have other questions, please pop them in the chat and we'll get through as many as we can. On that note, we have Sarah Scholfield with us today. She is an associate solicitor at Glaisyers Solicitors, one of HWB's ETL global partners, and she'll be leading the presentation today. So I will hand you over to Sarah and we can get things going.
So, as Bethany said, my name's Sarah Scholfield. I'm an employment solicitor at Glaisyers. This morning's session is going to be talking you through IR35 as it currently operates in the private sector, and then we're also going to be looking in the second half at the upcoming changes to the off-payroll working rules, which will come into effect from the 6th of April. So before we look in any detail at the IR35 regime itself, I just wanted to spend a little bit of time thinking about status from both an employment law and a tax perspective. You'll see from my first slide that there are some obvious differences between the potential categories that can attach to individual workers from an employment law perspective versus from a tax perspective. And notably, from an employment law perspective, there are three different statuses that can attach to an individual worker. So you could be an employee, could be a worker, or you could be self-employed. And from a tax perspective, there are only two categories. You're either an employee or you're self-employed. So if we pause to think a little bit about the employment law regime to start with, I like to think of it as a bit of a spectrum. And at one end of the spectrum, we have employees. And an employee is simply an individual who works under or enters into a contract of employment. And a contract of employment would include a contract of service and a contract of apprenticeship. And employees benefit from the whole plethora of employment law rights that exist. Some of those are what we call day one rights, and they're rights that individuals are entitled to from the moment they commence employment, such as the right to the national minimum wage, paid statutory holidays, and the right not to be discriminated against. And then we have other rights that people acquire after they've accrued a minimum amount of service. For example, the right not to be unfairly dismissed after 2 years service. At the very other end of that spectrum, we have independent contractors or self-employed individuals, and they don't benefit from any employment law rights. And then we also have this third category, which is a little bit of a hybrid category of a worker. And a worker is defined by way of a two-stage test. So you could be a Lim A worker or a Lim B worker. Now, a Lim A worker is just simply somebody who enters into or works under a contract of employment. So clearly that would cover employees and apprentices. And then the Lim B test is somebody who enters into any other type of contract where they're agreeing to personally provide work or services to the other contracting party, and that other party to the contract is not a client or customer of that individual's business or undertaking. And this concept of a worker is unique to the employment law sphere. It does not apply in the tax regime. And we have had quite a lot of litigation around whether individuals meet the slightly lower threshold of being a worker where they may not quite be full-blown employees. We've had the decision in the Uber case last month from the Supreme Court, in which Uber's drivers were held to be workers, and I'll come on and talk about that case in a little bit more detail shortly. And workers benefit from some basic employment law rights. They don't get the full range of rights that employees do, but they do benefit from things like the national minimum wage, paid statutory holiday, pension auto-enrolment, etc. So if we think about the tax regime now for a moment, you'll see again from the slide that from a tax perspective, an individual contractor is either an employee or they're self-employed. If they're an employee, then the employer in that arrangement is liable for processing their employment taxes, so PAYE and national insurance contributions. If they're self-employed, then the individual is free to structure their income in the most tax efficient way possible. Commonly, that may be by way of a small salary and a dividend payment. I think it's important to remember that if an individual is found to be an employee from either an employment or a tax perspective, that doesn't automatically mean that they would qualify for that status in the other area, but the tests they apply are the same. So I think it's pretty likely if somebody were to be an employee for tax purposes, then it's reasonably likely they would be for employment law purposes and vice versa. Oh, sorry, I should have put that slide up before I just spoke you through all of that. Okay, so what is IR35 then, and what's its purpose? Well, IR35 is an anti-tax avoidance legislation. It's set out in Chapter 8, Part 2 of the Income Tax, Earnings and Pensions Act 2003, and it regulates the tax treatment for workers who provide their services through what is called an intermediary. And commonly, an intermediary would be a personal service company. And you can see from my slide there, I've given a very basic example of a contractor who's providing services through this intermediary, as I say, commonly a personal service company, and the personal service company is then contracting with the client to deliver those services. To establish an employment contract or an employment relationship, there has to be a direct contractual relationship between the contractor at this end of the contracting chain and the client at the other end. And this structure, as you will see, disrupts that direct relationship because the contractor contracts with the intermediary and then the intermediary contracts with the client. And in the absence of that direct contractual relationship, there can be no contract of employment between the contractor and the client. And HMRC have long been concerned about individuals using this type of corporate structure to deliberately avoid paying the increased employment taxes, when the reality of the situation is if you remove the intermediary from this process, from this diagram, and you look simply at the relationship between the contractor and the client, in actual fact, that contractor probably is in deemed employment with the client. According to Revenue, only 10% of personal service companies correctly apply the IR35 rules, and the Treasury has estimated that that amounts to a cost of £1.2 billion a year. And I think that those figures go some way to explain why the Revenue are looking to make the changes they are with effect from next month. So how does IR35 actually work then? Well, IR35 involves constructing what we call the hypothetical contract between the contractor and the end user client. So in other words, what would the terms be if the contractor engaged directly with the end user client? And it really involves ignoring the intermediary, removing that from the equation entirely and looking at the contractual arrangements and the working arrangements between the individual contractor and the end user client. And you'll see from my slide that there's a 3-stage tests to go through to determine whether an arrangement would fall within IR35, and that means that the individual would be classed as being in deemed employment with the client, or whether it would fall outside IR35, which would mean that the IR35 regime doesn't apply and the individual contractor is genuinely a self-employed individual. So the first part of the test when you apply IR35 is to look at the written contractual terms that are in place between the personal service company, the intermediary, and the end user client. There will also probably be a contract between the individual contractor and the personal service company. So it's important to look at those written terms as well to see what's been agreed in writing between the parties. But you have to go beyond that, and you also have to think about and examine the working arrangements that exist between the contractor and the end user client. And ideally, you want your contractual terms and the working arrangements to mirror one another. Once you've done that, you then have to move on to step 2, which is to construct or to imagine the terms of this hypothetical contract between the contractor and the end user client. So ignore the intermediary and examine what the terms would be if the contractor engaged directly with the client. And once you've done that, you then need to determine whether that hypothetical contract would amount to a contract of employment or not. And that involves applying various employment status tests. So I'm just going to look at some of the employment tests now in a little bit of detail. And these tests have been developed over the years through decisions of the Employment Tribunal and the Tax Tribunal. And it allows advisors, such as myself, to distill from those cases the key tests and factors to take into account when making a determination on whether somebody is likely to be in deemed employment with the client or not. So the first test is the test of personal service. So is there an obligation on the contractor to personally provide the service or the work? If there is an obligation of personal service, that would indicate an employment relationship rather than a self-employed relationship. Commonly, when you're considering personal service, you will also want to examine whether there's any right of substitution. So in other words, can the contractor send somebody else in their place? Are they completely free to do that whenever they like? So is there an unfettered right of substitution? If there is, that would indicate a self-employed relationship. The contractor could send whoever they want whenever they want. Or is the right of substitution subject to certain controls by the client? The more control a client would exert over a right of substitution, the more likely I think it would be to be classed as an employment relationship. The second test is what we call the Mutuality of Obligations test, and that involves considering whether there's an obligation on the client to provide work to the contractor and whether there's an obligation on the contractor to undertake that work for an agreed fee. Again, the more mutuality of obligations that exists, the more likely there to be a contract of employment in place. The third test is the control test, and that involves looking at and considering whether the client exerts control over what the contractor does, when the contractor provides the services or the work, where the contractor provides those services, and how those services are delivered. And control doesn't necessarily mean control over day-to-day activities. It's more a framework of control that's actually important. And control over how a service or particular project is delivered is probably less important than the other factors, because the courts and the tribunals are slowly starting to recognise the fact that in some instances it may not necessarily be, it may be in keeping with employment or self-employed status, as the case may be, for a client or a contractor to have more control over how something is delivered. We then have the integration test. So as the name suggests, this involves looking at how integrated the contractor is within the client's business. So are they part and parcel of that business? Are they invited to internal meetings? Do they attend external events? Do they have a client company email address? Are they included on the client company's mailing list, etc., etc.? And the more well integrated a contractor is within the workforce, the more likely they are to be classed as an employee of the client. And then the final employment status test that we tend to think about is looking at the other provisions of the contract, and are those provisions consistent with it genuinely being a contract of service? And you can sort of break that down a little bit, and it involves thinking about things like, is the individual contractor and the personal service company in business on their own account? So examining the way the personal service company is run. Do they have their own website? Do they have their own offices? Do they have their own employees? Do they have their own insurance policies? All of those things would suggest that it is a self-employed arrangement rather than an employed relationship and arrangement. Could the contractor and the personal service company suffer a loss by virtue of the way they provide their services, and or could they make a profit by the way they decide to deliver those services? If they could, again, that is indicative of a self-employed relationship. And do they have, for example, if there's some problem with the work, if there's a defect, do they have to go back and remedy that at their own cost and in their own time? And if they do, then that would also suggest a self-employed relationship rather than an employed relationship. I just wanted now to talk through a couple of cases related to employment status. The first is a decision of the Upper Tier Tax Tribunal, and the second is a decision of the Supreme Court involving employment law rights. So the first case is the Atoll House Productions case, and this is a decision from the Upper Tier Tax Tribunal that was handed down last month. And Atoll House Productions is the personal service company for a BBC radio presenter called Kay Adams. And Miss Adams and Atoll House entered into a contract with the BBC. And as part of that, she agreed to present a minimum of 160 radio programmes a year for BBC Scotland, and the BBC in exchange agreed to pay a fee of £155,000. The BBC had a modified right of first call over Miss Adams' services and could also limit her ability to go and undertake work elsewhere. HMRC investigated the arrangement and they determined that it fell within IR35, which meant that Atoll House Productions, the personal service company, had to account for national insurance and income tax on the fee it received from the BBC, because that fee was regarded as being employment income. Miss Adams disagreed and she challenged it in the First Tier Tax Tribunal successfully, and the First Tier Tax Tribunal said, we agree with Miss Adams that this is an arrangement of self-employed nature. HMRC decided to appeal that decision, rather unwisely as it transpired, because they were unsuccessful. And I've highlighted this case because the Upper Tier Tribunal examined some of the employment status tests I've just outlined, and it acts as a really good reminder of the fact that this isn't a tick box exercise, and employment status cases are notoriously difficult. It really does involve a little bit of a gut feel over things and stepping back and looking at the bigger picture to determine whether something genuinely is a self-employed arrangement or whether it's actually more an employment relationship. And in the Atoll House case, the Upper Tier Tax Tribunal said, well, we're satisfied that there's sufficient mutuality of obligations to indicate an employment relationship, because Miss Adams has to undertake a minimum number of radio shows a year, and the BBC is committed to paying a minimum amount of money for those programmes. They were satisfied that the control test was met, because the BBC controlled, to a certain extent, Miss Adams' ability to undertake other work. They also dictated when she presented the radio programmes and where she presented them from. And then the Upper Tier Tax Tribunal went on to consider the other provisions test. So they said, right, well, we've looked at the others and we think that does put it in the employment bracket, but now we've got to think about the other provisions of the contract and the arrangement. And as part of that, they looked and focused on the fact that the personal service company of Miss Adams had genuinely entered into the contract with the BBC in business on their own account. She had a long-standing history as a freelancer, some 20 odd years, and the Upper Tier Tax Tribunal said, well, we recognise that there's a degree of financial dependence between Miss Adams and the BBC for the tax years that were in dispute, but you mustn't just focus on that. It's important to step back and look at the bigger picture. And having done that, they really did feel that this was a self-employed arrangement. And they also focused on the fact that Miss Adams wasn't subject to any internal BBC policies or procedures, and she didn't have access to their systems when she was at home. The next case I want to just briefly talk about is the Uber decision. I'm sure we're all very familiar with this by now. It's been all over the news, the television, the radio, newspapers, and it actually dates back to 2016 when two of Uber's taxi drivers issued proceedings in the Employment Tribunal. And they argued that they were workers of Uber's and therefore entitled to national minimum wage and statutory paid holidays. And Uber have consistently maintained that their drivers are independent contractors, and they've always run the argument that they're simply providing a technology platform that puts these independent contractors in contact with customers, the people taking the taxi journeys. And the Supreme Court looked at this and they rejected Uber's appeal, and they followed the decision of the Employment Tribunal that the drivers were workers. And they focused in particular on the degree of control that Uber exercises over its drivers. So they looked at the fact that Uber dictates the fare the taxi drivers can charge customers, which inevitably influences their pay. Uber imposed its contractual terms on the drivers. There was absolutely no negotiation possible. Uber controlled and prevented really the drivers from having communications with the customers. And they restricted the driver's ability to decline certain rides. So as far as the Supreme Court was concerned, whilst Uber's contractual documentation went to great pains to make the point that these individuals were very definitely self-employed individuals, the Supreme Court said, well, we've got to look beyond your contractual paperwork and look at what's actually happening down on the ground. And having done that, they were very unequivocal that the drivers were indeed workers and not self-employed individuals. And therefore, Uber have now had to confirm that they will pay them at least the national minimum wage, paid statutory holidays, and set up a pension scheme for all of their drivers. At the bottom of the slide, you'll see I've mentioned the Sest Tool, which some of you may already be familiar with. This is HMRC's online check employment status for tax tool, and it essentially allows individuals and businesses to log on, answer a series of questions, and get a determination from revenue as to whether the arrangement is likely to fall within IR35, and therefore the individual's income be taxed as employment income, or fall outside IR35. It's been in place since 2017, and it has been pretty heavily criticised over the years, largely because it doesn't always give a determination, which if you're an individual or a business is obviously not particularly helpful. It does have two advantages. However, if you do access the tool, then it gives you a good idea of what of the view HMRC may take if they investigate a particular arrangement. And secondly, it's a really good idea if you use the Sest tool to print off a copy of the decision and also a copy of the questions in your answers, because that will be really good evidence if HMRC do ever investigate your arrangement. So how does IR35 work in the private sector at the moment? Where does the risk and liability sit? So you'll see from my slide that at the moment it is the intermediary, it is the personal service company who is under the obligation to consider whether a particular arrangement falls within or without of IR35. And that involves going through the three-stage test we've already covered, looking at the written terms of any contract, looking at the working arrangements, constructing this hypothetical contract, and then taking that hypothetical contract through the various employment status tests to determine whether that would be a contract of employment from a tax perspective or not. If an intermediary, having gone through those three steps, determines that IR35 does apply and the contract falls within IR35, the intermediary then has to operate PAYE and make national insurance contribution deductions on the income the personal service company receives from the client. If the intermediary does not do that, or they get it wrong, then HMRC will pursue the intermediary for the unpaid tax. They can also impose interest and penalties up to 100% of the tax itself, where an intermediary has got it wrong or hasn't done it at all. In terms of how far back that liability can go, in terms of how much time HMRC has to pursue an intermediary, generally speaking, it has 4 years to take action, but that can be extended to 6 years where there's a suggestion maybe of a deliberate omission on the part of the intermediary, and up to a maximum of 20 years where they feel there's been some deliberate tax fraud. So, changes to the IR35 regime. It's actually changes to the off-payroll working rules that will come into effect. IR35 will remain as it is, and we will have changes, as I say, to the off-payroll working rules for the private sector. We had similar changes back in 2017 in the public sector, and essentially HMRC are looking to roll those out now to the private sector. The implementation date is the 6th of April 2021. It was due to come into force in April 2020, but as a result of the COVID-19 pandemic, the revenue pushed it back a further 12 months to give business time to properly prepare, given the distraction, shall we say, of the last 12 months with the COVID pandemic. And what the changes to the off-payroll working rules will mean is that responsibility for determining whether a contractor is in deemed employment with a client will shift up the contracting chain. So it will no longer sit with the intermediary, it will instead now sit with the client. We adopt some similar definitions to those that are already in place for public sector businesses. So we've got this definition of a client, and that's just the highest person in the contracting chain. So it's the entity to which the worker is actually providing their service or their work. And we have this definition of a fee payer, and the fee payer is simply the entity that physically pays the personal service company. So it may well be a client in a three-party chain, but where you've got a longer contracting chain, it will be the party that sits directly above the personal service company and who actually pays the personal service company. So will the new rules apply to all businesses? The simple answer to that is no, they won't. So the changes, i.e. the shift in responsibility up to the client, will only apply to medium and large size businesses. And I've included on the slide the definition. So to be a medium and large size business, a business will have to satisfy at least two of the following three criteria. So they must have a turnover of more than £10.2 million in the financial year, a balance sheet total of more than £5.1 million, and an average over the year of at least 50 or more employees. And you must satisfy two of those three. It doesn't have to be all three, but it must be at least two of those three. It will also apply obviously to all public sector organisations and voluntary organisations as well. Where you're dealing with a group company, it's important you look at the group as a whole. So all trading entities will need to be taken into account when you're determining whether a business falls within the medium or large sized category or whether it would be classed as a small business. The current IR35 regime will apply to small businesses. So if a business doesn't meet two of those three criteria, it would be classed as small. And in that situation, the rules I've already outlined relating to IR35 will continue to apply. So in other words, it will remain the intermediary's responsibility to determine whether the contractor is in deemed employment with the client or not. And obviously, if they determine that they are, it is the intermediary's responsibility to process PAYE and make appropriate national insurance deductions. If a business doesn't satisfy two of those three for 2 consecutive financial years, then they will move from being a medium or large size business into the small business category, which would mean that the client in that situation would then no longer be responsible for making that assessment of status, and it would shift to the intermediary. But as I say, that would have to be the case for 2 consecutive financial years if a business were to move from the medium or large size category down to the small company category. In relation to sole traders, before we move on, just a brief point. I often get asked this question, but if you are a sole trader contractor or you're a client engaging the services of an individual directly, i.e. they're not providing their services through an intermediary, then neither the IR35 regime or the off-payroll working rules will apply to that engagement. Now, just because those regimes don't apply doesn't mean the individual could not become an employee of the client. So it's still important, if you're the client in that situation, to keep an eye on and review the relationship with that individual contractor and to apply the employment status test that I outlined earlier, to be clear on whether that individual may have become an employee perhaps over a period of time, or whether in fact they do genuinely remain an independent contractor. So what will clients, the end users, what will they need to do now in light of these changes from the 6th of April? Well, the first thing they're going to need to do is undertake an assessment of each individual contractor's status. And they have to confirm that decision in writing by way of what will be known as a status determination statement. And that statement needs to not only give a decision on whether that individual falls within the off-payroll working rules and is a deemed employee or not, but also, and importantly, the reasons the client has reached that determination. The status determination statement then needs to be given to the individual contractor and also any other party in the contracting chain that sits between the client and the contractor. So the client doesn't have to give it to everybody in a very long contracting chain, but they do have to give it to the next party. So that could be the personal service company in a 3-party chain, or perhaps where there's a slightly longer chain, it may be, let's see if I've got an example on the slide. So in this example here, the client would have to give it to the contractor and the intermediary, but in this example here, they'd give it to the contractor and then they'd give that to the agency in that scenario. So they don't have to pass it to everybody down the line, but they do have to give it to the contractor and the next party in the contracting chain. And it's very important that that is then filtered down the chain to make sure that everybody who's in that contracting chain has a copy of the status determination statement. And it's a very good idea to keep evidence of the fact that you have, one, completed the status determination statement, but also importantly that you have passed that on to the relevant individuals or entities in the contracting chain. So clients will need to take reasonable care when they're preparing a status determination statement. So what does reasonable care mean? Well, the revenue in their employment status manual have given us some examples of behaviours that would demonstrate a client has taken reasonable care. So, for example, accurately applying and thinking about the employment status tests, completing the HMRC Sest Tool accurately. And I always say to clients, keep a copy of the decision, the questions and your answers, so you've got some evidence that you've done that. Seeking advice from qualified professionals. If there's any change in workers' terms and conditions or the working arrangements, revisit your status determination statements to make sure that they are still accurate and reflect the true arrangements. Some clients may decide to subcontract out the status determination process. You can do that, but ultimately as the client, you would remain responsible for making sure that reasonable care has been taken over the production of any of those status determination statements. So you want to really check and review the processes of any subcontractor to make sure that they are actually doing things properly, because as I say, the client will ultimately still retain responsibility for the status determination statement. And also making sure and reviewing existing determinations in light perhaps of some changes that might have come into play. In addition to that, HMRC has also given us some guidance on steps or behaviours that would be indicative of a client not having exercised reasonable care. And the most obvious example, and I think one that perhaps a few clients might be thinking about, is just taking a cautious approach in determining that all contractors fall within the off-payroll working rules and processing them through PAYE and making appropriate national insurance contributions. HMRC have been quite clear that that's not acceptable, that would not constitute reasonable care. There's a very clear expectation that clients will look at contractors on an individual basis and not simply adopt a blanket approach of deciding that everybody falls within the rules. And if a client does do that, then they would fall foul of this obligation to demonstrate they've taken reasonable care. HMRC have given some other examples of behaviour that wouldn't constitute reasonable care. So, for example, making a determination when you know full well that the terms that apply or the working arrangements are going to change and therefore render that determination inaccurate, or failing to take steps to reconsider determinations when arrangements have changed and you're aware of the change, but you simply do nothing to address it or to deal with it. You'll see from the second bullet point down that contractors and the fee payer will have the right to appeal, essentially, a status determination statement that's given to them by a client. They can do that at any point during the contractual relationship. So it doesn't have to be right at the very beginning. It could be in the middle. It could be right at the very end. It could be on the last day of the contract in principle. They have the right to challenge that decision. And if they do, then the client is obliged to deal with that appeal and respond within 45 days. And by a response, or the way a client needs to respond, is to either agree with the challenge and issue a new status determination statement, or if they don't agree with the challenge and they stand by their original determination, confirming that in writing with reasons is really important. And hopefully you'll sort of gather from this talk that you want to be building up a nice audit trail as a client of all the steps you've taken to demonstrate that you have genuinely tried to apply these rules properly, and that you've given all the appropriate information to the contractor and the relevant parties in the contracting chain. So if a client determines that the off-payroll working rules do apply, then it's the fee payer who's responsible for processing PAYE and making the national insurance contributions at source. And you may remember from a previous slide that the fee payer in a three-party chain will be the client, because they will be the party physically paying the intermediary, the personal service company. But in a longer chain, it may be that the fee payer is, for example, an agency who is the party that physically pays the personal service company. And it is the fee payer, as I say, that's responsible for making the tax deductions at source on behalf of the contractor. So what happens then if a client doesn't comply? Well, if a client doesn't comply either because they just don't do a status determination statement, or they do prepare a statement but it subsequently transpires that it was incorrect, then it's the client that becomes liable for deducting the appropriate national insurance and PAYE tax, not the intermediary. So rather than it passing the responsibility to the fee payer for deducting tax at source, that instead will remain with the client. So it has very serious potentially ramifications for clients if they get this wrong, because they will then be on the hook for the tax. If anybody else in the supply chain fails to pass down the status determination statement, then that party will then pick up the tax liability. So if an agency, for example, doesn't pass the status determination statement down in the correct manner, then they will be liable for the PAYE and national insurance deductions that will need to be made on the contractor's income. In addition to this, as I outlined in relation to the IR35 regime, HMRC have the power, obviously, to pursue unpaid tax, but in addition to that, they can charge interest, penalties and costs that can be up to 100% of the outstanding tax that is due. So pretty significant, really, if the parties get this wrong. So preparing for the changes then, I just wanted to briefly outline some steps that the client, the fee payer and the contractor could consider taking in readiness for the changes. I think from a client's point of view, the first thing really you want to be doing is putting in place some contract review processes. So having a look at your current contracting workforce and the arrangements that you have in place with them. How many contractors do you have? What terms are they engaged on? Do they provide their services, or is there an agency involved in the contracting chain, etc., and determining their likely status. You also need to think about deciding how status determination statements are going to be prepared, who's going to do it within the organisation. Will it be a function of HR? Will there be a specific individual earmarked for doing these status determination statements? Do they have enough knowledge to be able to do them properly? May you consider bringing in some external advisors to help with that process, etc. And also deciding on a process for status determination appeals. Again, who is going to be responsible for that? How are you going to make sure that as a client you comply with the 45-day deadline to get those appeals dealt with and a response back to the relevant party in writing within the 45-day deadline? You will want to maintain a strong paper trail, a strong audit, as I mentioned before, of the steps you've taken to demonstrate you've reasonably tried to comply. HMRC have said they'll take a light touch to enforcement for the first 12 months and that they won't impose any penalties on parties where they can demonstrate that they have genuinely tried to apply the rules, even if they may have got them slightly wrong. That's why, again, this paper trail, this audit to show you've really tried to do the right thing is crucial, really is key. You may also want to think about identifying any high-risk individuals, maybe consider changing the terms, may even decide, like I know some large-scale clients have done, to just simply not engage with consultants through personal service companies anymore, perhaps to employ them directly, for example. And the fourth point is just consider potential changes to working arrangements. If you feel that there may be an arrangement in place that is perhaps a little bit borderline, it may be you feel able to make certain changes down on the ground to make sure that this is genuinely a self-employed arrangement. From a contractor's point of view, you may want to get some advice on your own status, get advice perhaps on your consultancy agreements that you may have in place to make sure, where possible, that your contracts mirror the actual working arrangements themselves. Engaging with clients, I think, is really important from both a contractor and a client perspective, actually. As a client, the best source of knowledge for you to get a really good feel for how an arrangement works in reality is to actually speak to the contractors themselves. And likewise, if you're a contractor, you may be a little concerned that the client perhaps doesn't really know who you are, doesn't necessarily understand your engagement with them, and therefore reaching out and educating them, I think, is a really useful exercise to undertake. And if you're a fee payer, think about setting up payroll systems. It could be you've already got a payroll system in place for employees that you can use, or you may want to set up a new payroll system entirely to deal with the contracting workforce. So there's plenty really, I think, for all parties in the contracting chain to be getting on with. The 6th of April is obviously less than 2 weeks away now, so it is important that clients, contractors and fee payers take the changes seriously and, you know, take appropriate steps to get themselves ready for when the changes come into force. So I think Bethany now may have some questions for me. Possibly?
Yes, Sarah, we've had 3 or 4 questions in, so okay. I'll start with the first one. Are there any template SDS, so the determination statement, that can be used?
No, HMRC haven't been so helpful as to put a template up on their website. What they have said, though, is that if you were to use their Sest tool, so their check employment status for tax tool, and you keep a copy, like I keep suggesting, of the decision, the questions and your answers, then they have indicated that that would probably constitute a valid status determination statement, because it will confirm the key requirements, namely the decision you've reached and the reasons you've reached that decision, which will obviously be your answers to the relevant questions on the Sest tool. So yeah, there's no sort of template available that the Revenue have put together, but they have helpfully indicated that if you do use their Sest tool, which I think is advisable, that you could use that as a valid status determination statement in its own right.
Can the HMRC act retrospectively prior to April 2021 for the changes that are about to come in?
The answer there is possibly. They have indicated that they won't use information that they receive through a status determination statement to take retrospective action, but they have caveated that slightly by saying, well, we won't do unless we think there's some fraudulent activity or criminal behaviour, which does leave the door open a little bit to them, because they're quite broad concepts and could cover lots of different scenarios. So I think it's probably best to proceed on the basis that they could possibly do that, because, as I say, they've put that caveat in there, which to me suggests that, you know, they're certainly not closing the doors to the possibility of that.
Does IR35 still apply if let's say this is an example for me. So does IR35 still apply if I have more than one client, even if 90% of my time is spent with one client?
The answer is yes, IR35 could still apply, and all the off-payroll working rules could still apply. From a practical point of view, the more clients you are providing services to, I think the more likely you may be a self-employed individual, but you have to make that assessment on a contract by contract basis. So you also need to think about the clients you're providing services to. So are they a small business? If they are, the IR35 regime will apply, and the personal service company will be responsible for determining status and potentially deducting tax at source. Whereas if you're delivering those services to a medium or large business, then the responsibility for determining status will sit with the client by way of the status determination process. So I think there's no simple answer. You have to look at all of these on a case-by-case basis. They're very fact sensitive, as lawyers like to say. So I think just because you happen to be providing services to more than one client in and of itself doesn't or isn't determinative of your status. But I think, from a practical point of view, if you are spending your time working across different clients, you may find perhaps that you could be an employee for tax purposes for one or two of those clients, but maybe not for some of the others. As I say, it involves looking at individual cases, really.
And the last question we've got is there a particular length of contract at which point the arrangement switches from being self-employed to employment?
No, there isn't. So there's no line in the sand that I can, tell you all about at which point you'll know you're at risk of a relationship tipping from being self-employed into employed. I think from a practical point of view, the longer you're providing a service to a particular end user client, the stronger the mutuality of obligations will be, because there's an ongoing obligation to do work and to have work provided to you. And also familiarity tends to creep in, and contracting parties tend to be very good and stick to the terms quite strictly of written contracts at the outset of their arrangements. But then over time, people tend to forget really that contractors are not employees, and you can very often find that individual just gets settled in within the client's business, and they end up being treated in much the same way as the client's employees. And that's where the biggest risk lies, really. If you start treating them in the same way as your employees, then, if you think about your employment status tests and your integration, the control you're exerting over them, you're starting to kind of have a lot more factors pointing towards an employment relationship rather than your arm's length independent contractor relationship.
Great. Well, that's all the questions we've had through. Obviously, if any others come to mind, please do get in touch and we'll do what we can to give you as much information as we can. Like I said, this webinar has been recorded, so we'll be sending out a copy later today. Thank you, Sarah, for your time, and thank you for everyone who attended. We hope you have a great rest of your week. Thank you.
Thank you.